The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We kick things off right after 9 a.m. Eastern Time. You got markets slightly in the red this morning. Metals trading higher to new all-time highs yet again last night. We'll get into it. We kick it off with growth stocks. NASDAQ 100, a little bit of an acceleration to negative prices at about 5 a.m. this morning. 25,755 right now. You're negative by about 0.6% or 154 points in the red. S&P's negative by 0.4%. Off 29 points at 69.72. The Dow right now off 160 points. Dow had some negative action yesterday after reaching all-time highs early in the session. The Dow's off 0.3%, off 160 points at 49,249. And the Russell off a similar 0.3%, 0.3% in the red, off 6 points at 26.41. Bitcoin, how about crypto? Catching a bid yesterday. Up another $800, 95,580. We were at almost 91,000 to begin yesterday's session. Crude, it's not stopping. 61.78. If you haven't gone and filled up your gas tank yet, do it right now because the price of the pump is going up. Crude up another 1%, up 63 pennies at 61.78. We jump to yields. The Fed in focus. Now the Fed meets 2 weeks from today. Okay, that's their next meeting. The market is fairly certain that they're going to do nothing and stay right where they are at 3.5 to 3.75%. Right now, you're looking at a 10-year that's basically unchanged. We're at 112.09. And right now, we're talking about a yield of about 4.17. Okay, 4.17 on the 10-year. We get some more bank earnings today. We'll get into those. You jump over to the dollar, 99.02. We're as high as 99.25 in the overnight session. The dollar, negative by about 10 pennies, right at 99. And let's jump to gold. So gold, that's another all-time high, folks. Right there in the last hour, $4,650. Gold up $38, up 0.8%. That's an all-time high. The big winner, as usual, is silver, man. My goodness. Now, folks, I put out a gold report yesterday, okay? And if you're riding this wave, congratulations, okay? If you're holding for the long run, I think 2026 is going to be a good year for metals. I think the dollar is going to face some weakness. It's going to face some headwinds at least as you're talking about lower rates. But boy, at some level, folks, you just went from $50 about 45 days ago, and you're at $92, okay? You're getting parabolic. What I would encourage you to do is protect yourself, pick a stop. You're going to have more opportunities in this market, and we are going to get a pullback, and we're approaching those levels, man. Maybe you ring the 100 bell, but you're going to wake up one day, folks, and we have a lot of volatility, okay? This is one of the things I said in the gold report yesterday. Take the politics out of it. We got a lot of volatility right now. We got a lot of unknowns, right? You have a new Fed chair who's going to be in line in the next – who's that going to be, okay? We don't know yet. Once we get that name, that's – part of it taken out of the equation. We're at peak Fed volatility right now in terms of Powell getting subpoenas. He's only got 3 months left. Everyone's a little anxious. Hopefully that resolves its situation so it doesn't hold up the next nomination. Because one of the biggest risks to this market right now I see is that the Powell deal actually just gets in the way of the next nomination. We were about to turn the corner from Powell. And if anything, that presents the challenge. Now, that's, in my opinion, that's going to happen. And when that happens, you're going to see that volatility, right? You're going to see the unknowns that are priced into this market, like what's going to happen with the Powell subpoena and the possible indictment. Will that get cleared away, leaving the path for the next Fed chair? Who's the next Fed chair going to be? Will that provide a little bit of eliminating variables, right? Unknown variables. And then you have the tariff. I mean, Fletch, I appreciate it. The SCOTUS blog, right? 9:30, we might get some opinions. We're going to get a decision on the tariffs. Either way, the Supreme Court goes, we're at least going to have that variable taken out of the equation because nobody knows what's going to happen right now. Are they going to be constitutional or are they not? And if they are not constitutional, is the government going to have to provide rebates versus not? So you're going to wake up one day, folks, and some of that uncertainty is going to be pulled out of the market. We're at like a max uncertainty scenario right now. And when that happens, the volatility to the upside right now, yeah. And we do have quite a squeeze going on in silver, man. Okay, but we know how these squeezes go. When markets become irrational, protect yourself, folks. All right, man, you got quite a run in some of these equities. You jump over the XAU. And we are talking about well above the 1 to 1.218 expansion. And the XAU just traded from 260 to 400 in the span of 2.5 months. No real pullback in there whatsoever. You got a couple weeks. You put this thing on a monthly. All we had was the October pullback. And we're talking about going now in 14 months of upside. You had one red bar in July. You crushed the market in April. And here we are sitting at 400. So protect yourself. And there's always going to be another trade, because the bummer of it is when you're going to get a pullback, okay? And I'm not spreading fear, folks. Silver is going to be fine. Metals are going to be fine, okay? But we had some real selling the day of December 29th, that Monday, a couple weeks removed. And we're going way above that level on lighter volume right now. I was talking about in the gold report, and we'll get into the markets after the next break. But boy, you have all this volume on silver on the run-up in October, okay? Silver was at $50 at that time, folks. We're at 91 now. Now, you've had some decent volume, okay? Last week, you did 653,000 contracts. There's only 1 week above that, and it's the October highs. And you don't have to have it over that. We have great volume in silver, okay? But then you back it up to gold. And this is going to matter, because gold, that volume ramp up in gold was tremendous. And in October, gold got to 4,400, 43.92, okay? 43.92 is where gold got to in October. We were at 43.92 9 days ago in gold, okay? Silver is on a run, folks. And whether, if you're looking for a store of safety in some of these areas, right, whether it's assault on the Fed, you think that's happening, whether you're worried about the instability of the tariff ruling, right? Maybe you're worried about the next Fed chair. Is the market going to think that there'll be inflation, right? So you want to flock to gold. No matter what you do, the relationship between gold and silver, and then you look at the volume, okay? That was the run-up in gold. Look at the volume since then. You had almost 6 straight weeks, almost right back to the acceleration in August. That's how you run up, man. It's getting a little dicey getting over these October highs. And I'm not looking for an extreme pullback, folks. I'm just saying, you came back and you tested that area in December, and maybe you come back and you do it again, okay? Because the volume has not compared to anything we had in those October levels. You jump over to silver, as I mentioned, much more pronounced on this recent run-up in silver. But silver is almost double what it was worth in October. And meanwhile, you have gold up a couple $100 from there, okay? At some point, those two are going to come back into a slight equilibrium. And you're approaching right now levels on a weekly and on a daily, okay? Silver traded $27 in the April lows, and we had a nice trajectory where we doubled in price up until we're where we were in October. And now we've gone above that trend, which is where you get a little parabolic. We're coming back talking bank earnings, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got Bank of America with their numbers. Banks under pressure, expectations, everything. It's been quite a run for the banks, and it seems like they're not quite living up to expectations. Yesterday it was JP Morgan. Today you got Bank of America down about $1 right now. That's about 2%. You're at 53.50. You see the volatility. We closed it out at about 54.54 yesterday. This net interest income, man. How about $16 billion in 90 days in net interest income, rising 10%. Profit, $7.6 billion or 98 cents a share. That's a beat versus the 96 they were looking for. So they beat on earnings. They beat on revenue. Profits up 12% to $7.6 billion. And revenue was up 7%. And yeah, net interest income, man, $15.92 billion. And that's just over what analysts were expecting. It's amazing how they always just tweak that number to get right above where they were. $240 million when you're talking about $15.92 billion. So what were they looking for? 70.68. 15.68 was the number they were looking for. You come in at 15.92. Equities trading revenue over $2 billion, $160 million more than what was expected. Now, this stock is down $1 today. You're down 2% on all these numbers. This is the kickoff of earnings season. Expectations sky high and banks just not living up to it. Smaller than expected provisions for loan losses at only $1.31 billion. Market was looking for $1.5 billion on that number. And they want to hear more about 2026. We'll see if they get any action on the earnings call. But you're lower to kick it off. And Citi, topping estimates as loan loss provisions come in lighter as well. Citi, $1.81 versus $1.67. Revenue, $21 billion versus $20.72. The market was looking for. And yeah, those loan loss provisions at about $2.2 billion versus $2.5. That's good for the economy. These banks see the internals of the loans. How much are they putting on their balance sheet to cover the losses that are potentially there? Yeah, you were slightly higher. Let's see if that has held, though, as these banks are chopping around. Citi, you were higher as well. Bank of America, you were higher as well. And Citi, you are slightly in the green by about $1.50 at 117.60. And as I mentioned, though, the expectations of these banks. Yeah. How's that for expectations, man? You know, what was the April low? It wasn't growth stocks. It wasn't all growth stocks. What was the April low? Whew. What was the buy? Some of the banks. All right, Citi, up from $53. You jump over to JP Morgan. Yeah, dicey scenario. Okay, not the type of action. You're accelerating lower. You're doing it on volume. The market's got some red today, and JP Morgan's going to be down another $2. And this is where, folks, you know, for you silver traders out there, and I get it, you know, nothing wrong. Hold it. Hold the line. Okay, hold on for dear life. It's been a heck of a run for you silver bulls out there still holding. As long as you're aware that you could be down 10 or 20% in a heartbeat, right? When you have runs like this that we're seeing in silver, just look at the run we had in JP Morgan. Great equity. Okay? January 5th, up to 337. Well, just like that with $30 lower. JP Morgan just almost lost 10% in 9 days. 10% in 9 days. Okay? For JP Morgan. But guess what? When you got this type of a run from 200 to 337 in a matter of 8 months, when you got a run from 136 to 336 in a matter of just over 2 years, okay, you want to see something wild. And this is how your brain should work, folks. You're going to hold silver. You're going to hold it for the duration. Go look at what type of potential pullbacks are possible in a healthy market. Well, for JP Morgan, 258 is just a 382 pullback of the acceleration higher over a 2-year period. And all you're really doing is coming back into this area that you had some strength in the beginning of 2025. Okay, you take a look at silver. And this is where it just becomes about trade management, folks. Okay, you're never going to get the high tick on the way out. And don't give back 20% on these numbers, because here's the issue. You get in at silver and $50 in November. You're up 80% right now. Okay, you give back 20% of this number, and meanwhile you're going right back to 70%, and your 80% winner, okay, turns into a 40% winner. Can always take some free shares if you want to hold it forever, but I'm just looking at the run from April, and you're talking about a 382 pullback that pulls you back basically to this strength we had in December of about $60. And realistically, folks, we were trading at $72 a heartbeat ago. And you back this thing up, you don't have to go far. $73 less than a week ago to $93. So keep your spikes up. And the great part is that I don't think this is going away anytime soon. Okay, we're going to have some pullbacks, and we're going to have more rallies in the year as well. But right now, I mean, that says it all. I keep looking at this gold chart. Okay, gold's a much bigger market than silver. Silver's catching all the headlines right now because of the volatility. But keep your eye on that volume, folks. It was a perfect run up. You got a nice pullback on lighter volume. And you can't get volume going on this second run higher, though. Okay, on a weekly basis, last week, 961,000 contracts. Look how many weeks in a row you did over a million. 1, 2, 3, 4, 5, 6, and then you drop. Nope, that was 7, 8, 9 straight weeks you traded over a million contracts. Last week's bounce was 961. Now, we're going to get some volume this week. You're at 653 already. But keep your spikes up, folks. And I think we're going to have a lot of volatility, so don't be afraid of getting priced out of this market and not having another chance. There's going to be plenty of chances to get back in. And with that, we got the dollar facing some weakness at 98.98. We're going to talk to Teddy Kegstack coming up at 40 past. He writes the Tiger Forex Report. Always a great conversation. We'll talk some currencies then. All right, let's check out the big dogs. NVIDIA, how about some volatility yesterday? NASDAQ off 136 today. You got NVIDIA off by about $1. Take a look at Microsoft, man. I mean, look at this. Right back to the highs of 2024 like nothing. Microsoft's Microsoft's $85 off the highs, man. $85. Let's take a look at this thing. Boy, technically speaking, right where we are right now, maybe you put a stop in like the 450 area, okay? Because you go below there, then where do you stop? Yeah, this bar from their April earnings potentially, right? That's a high of 439.44 for Microsoft. You have a nice sign of strength the week of December 15th. That was options expiration. Yeah, I always zoom in. When you see huge volume bars on options expiration week, folks, a lot of it's taking place on that Friday on the close. It's still real volume, but that's where you get some of these big spikes on options expiration. Microsoft, you're going to open at 466 right now. We got a low out there from November of 464. Market's under pressure. We're coming back for the opening bell, folks. We'll be right back.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We get the NASDAQ 100 at negative by 168 points right now. Yeah, having a great conversation about Walmart, Sam's, and the likes. You jump over to Walmart, man. How about this thing, right? You talk about some volume, and yeah, we got Walmart right now flat, but you talk about the acceleration, man. just not stopping. Walmart looks to be heading to a 1-to-1, bringing it up to 135. Pretty remarkable. All right, folks, right now we're going to jump over to our man Teddy Kegstad. You can check out Teddy's outstanding newsletter, folks, the Tiger Forex Report. It's a weekly report, $97. You gain access to Teddy's report. You gain access to archive webinars in there as well. He puts out new updates every Monday with updates throughout the week when warranted. And we got metals yet again, rocking higher. Teddy Kegstad, good morning.
Morning, Tommy.
So the dollar is kind of staying put a little bit. We have a little volatility, but I wanted to ask you about metals if we could, because currencies tie in, man. Everyone's talking about silver in the Tiger's Den, of course. Can we start it off with metals and how they tie in? What do you think about this run, man?
Well, yeah, the explosive rally in gold and silver is just it's nuts. I have to tell you, to be quite honest with you, it's a raging bull. It really is. I just think it's you got to be very careful. I think it's inflated by the derivatives markets, to be quite honest with you.
Okay, I've been spreading a little bit of caution out there this morning, and hey, in the long run, I love it. I do. I think the wind's going to be at the back in terms of some volatility with currencies, man. But in the short term, it's getting a little lofty right now and kind of dislocating a little bit from some of the rational moves that are taking place, I think. I just wanted your opinion. So what are you seeing out there, Teddy? We got the dollar chopping around 99. You always break down the pairings and how they contribute. What are you looking at most in this market right now?
Well, I'm looking at oil today. It touched our major directional pivot level to almost the tick, actually, and now it's come back off its highs. It's explosive. I still think it's a corrective rally. We broke the downward sloping trend line that the crude oil market had been, trading lower in now for months. And that just happened over the past few days. This week, we finally broke out to the upside a little bit. So, yeah, we're at the upper end of the range we've been in for, a while. So I really look at it as a profit-taking move. I think it's all hype. Overall, I think that you're going to have a glut of oil over the next 6 to 12 months in the market. So I really just don't see it as more than a speed bump right now. But it is having a little bit of an impact on, say, some currencies. So let's take a look at the U.S. dollar yen right now. That's one that's definitely been swinging around. I have to say, to start the year off, you got to be happy with the yen trade, right? So
yeah, quite a move, now, man. If you just been looking at the dollar index, right, you wouldn't. I mean, that is just a move. Wow.
Right. Now, if you look at the U.S. dollar yen, it's made new highs over the past few days. Today, ironically, even though it made a higher move high, it's lower on the day, and it's below the mid part of the range of yesterday. This is with oil that's up near its highs, you know what I'm saying? So I think that the rally in oil especially is probably, if you look at the yen, probably giving you the indication that oil is topping out right now. It's stretched, I think, as far as it's going to go. And I would say if you see the U.S. dollar yen track lower over the next couple of days, it's probably a precursor that oil is slowing down. And even the yen overall, with yields projected to go lower, it should have a pullback. So I think right now you're having that extension of probing the highs. I would be very careful being along in the crude market or the U.S. dollar yen, if you will. Also, I think you're going to have a big downside trade. There's still a gap to be filled in the U.S. dollar yen. I still believe that that's going to be filled within the next probably 3 to 4 months.
When you say the gap, is that down there at the 148? Is that where you're looking?
It certainly is. It goes back to. It was Friday, October the 3rd. It was the bottom of it, and then the following Monday, the 6th, is when it gapped higher. So that's quite a run. That's a very big run we've had off of that gap. Doesn't mean it has to get filled anytime soon. Probably not, but fundamentally, it really points to it doing so.
Pretty remarkable acceleration, man, to 158. And when you look in, could you talk to the listeners and viewers, because we talk about crude, and I know that America's a producer, man, and how that now contributes to the strength of the dollar. And then you look at a consumer like Japan. But when we have crude, and you do a great job of this in your newsletter, we're at $62 almost now. Could you just talk real briefly, as you talked us through before, how crude, with America being a producer versus a consumer like Japan, how that contributes to some of the action we have as we go forward in this crude market?
Sure. Well, you have interest rates that are a fundamental of currency pricing to begin with. Okay, so we know that plays on both the dollar and the yen. So right now we have the shortening of interest rate bias for us. So that is a fundamental driver to give strength to the yen versus the dollar. Okay, so that's why right now it's going against that fundamental technically right now. Okay, for that fundamental. Right. Oil, though, however, has been railing for the past now. Well, not just this week, for the past month. Okay, that has helped to support the U.S. dollar yen trade because all the oil deliveries it's traded in U.S. dollars. So no matter what, you have to purchase dollars and sell yen to buy oil. Okay, so there's a fundamental right there that puts a drag on the yen and gives a boost to the U.S. dollar as far as that currency pair is concerned. So you put the currency conversion plus you put the oil where it's at. And that puts a lot of support for the U.S. dollar yen trade, at least in the short run, for sure. So right now, when you're seeing how that's panning out, now that's the other thing you got to look at it too, is with us coming up with a rate hike and potentially more over the next 3 to 6 months, and if you take into account that we also have the potential for lower crude oil, that would fundamentally mean that the U.S. dollar yen trade is pretty much topping out and should fall back towards that 150 mark and then even get lower to fill that gap. And here's the thing is remember that the Bank of Japan, they actually raised rates last year. It was the first time they touched rates in decades, but they did raise, okay? So they have a quantitative raising bias, so they're not raising rates, but they're doing quantitative raising. So synthetically, they are raising rates, which is a counter to, it's a diverging from our, cutting rates and potentially quantitative easing as well. So when you have those fundamentals, that's where you're going to have, I was predicting at the beginning of the year that we would have lots of swing trades in the U.S. dollar yen, and I think it's pretty evident right now when you see how it's been trading. Yeah, it sure is, man. That chart, quite a chart indeed. Hey, what do you think about the steepening of the curve, if I can ask you? Because I find, I'm in real estate, of course, right? Mortgages are ever and present. You got Trump there's going to be $200 billion in the mortgage-backed securities and Fannie and Freddie. The 10-year is at like 4.2, something like that, and the 2-year, of course, do you see the Fed coming in and maybe buying? And we're speculating here, folks, but I think about this stuff, Teddy, of course, and like any administration, mortgage rates, man, we got to get them down if people have a shot. I get it. What do you see about the steepening? Because I try and, the Fed is one thing, right? But then I try and look out at that 10-year. What do you think about the 10-year as we go forward in the next maybe 6 months or something? That's a great question, Tommy, because, the Fed dictates the discount rate, which definitely affects all of the interest rates. But the market still is going to do what the market's going to do. Right. We know that the market's already factored in most of the interest rate cuts that we've done. But, I do think that you're going to see a steepening of the curve, at least in the short run, and then see a big snapback once we have the new chairman I like it, man. I like it. Great stuff as always, Teddy. Folks, check out the Tiger Forex Report. Comes with a 30-day money-back guarantee. He's got great info in there every week. Teddy, how about those Bears, man? We'll see you next week, they're going to make a movie about this team. By Caleb Williams. We got to run. Go Bears, go care. Patriots, too. We'll see you in the finals, maybe. Thanks, Teddy, man. Bye-bye. We're coming right back, folks.
That possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. And man, we got some volatility right now. Okay, this is a 1-minute chart on the S&Ps. We'll go to the NASDAQ. We just broke the lows. When I was talking to Teddy, what was remarkable is that I was like, did the market just tank? Did we just get like a tariff ruling or something like that? And then we got a bounce real quick. Okay, and then in the last 7 minutes, you now have the NASDAQ 100 down 150 points from where we were. You jump over to the S&Ps, you're now down by 38. Okay, you talk about a two-way. You just accelerate. These are 1-minute bars. You accelerated up to almost 69.80, and just like that, you give up 20 points. The market just can't quite figure out where it wants to head, but look at that volume. Okay, right on the opening bell. We got lower prices right now. You jump over to the VIX coming at you. Yeah, pay attention to this VIX as well. VIX 1742. Be interesting. Our man Steve Rhodes will have to check out that VIX when it's moving 10% one way or the other, right? You're up 9.3% today on the VIX, and that's after quite an acceleration yesterday. You got a 14 handle, 1498 on the open yesterday, and we're pushing 1753. Watch out in this market, folks. All right? Same as silver. We have a heck of a run on the way up. Don't be surprised by some of the pullbacks that are going to be possible when the market's, I mean, you're talking about, nope, not that one. Forgive me. Let's delete this one. All right, and just talking about the run-up, I mean, you look at some of Basil's monthly charts, and it says, of course, we're not going down. We haven't even peaked out once. We're at like a peak A, right, from the April low. But if you're just talking about a 382 retracement, remarkably, it almost brings you back to the highs of 2024, folks. The highs of 2024, 22,450. If we get a 382 pullback of this acceleration we've had over the last 8 months, 22,563. Not saying it happens. But that's one of the things I'm looking at in this market. And when you look at the potential swings it has, okay, if you're holding longer term, you better believe that this type of volatility is present. You came into 2024 at 21,000. Intra-year, you ran from 16,000 to 26,000. So, you know, to think that somehow we have, it's been a straight shot from 10,000 on the 2022 lows to 26,000 with two small pullbacks. The April one of last year, the most pronounced, of course, bringing you back to 16,000. But yeah, you know, at some point, folks, and we're seeing a reaction today. So pay attention, man. You're coming into last Thursday's lows, 25,639. Let's jump around to yields. Here we go. Higher price, lower yield, up by 5 ticks right now. This is a flight to safety, man. They're selling stocks. They're buying fixed income. You jump over the dollar right now. Yep, dollar's trading lower at 98.59. And metals as well. Not silver. No, I joke. Silver, 90.82, up by 5.2%. We jump over to platinum, up by 1.25% right now. Copper up by 0.4, and crude up by 0.8%, 61.64. Yeah, always a great conversation with Teddy. Folks, check out that Tiger Forex report by Teddy. And also, didn't mention, under the services tab, he's got a couple great webinars. Capitalizing on time with calendar stock option spreads. Okay, ties options into that as well. And then you're talking about Japanese candlestick pattern stock and option strategies. Teddy's written a book on candlestick patterns. Check that one out as well. They're both only $97, and you gain access to them forever on your members page once you sign up. Because, yeah, that dollar yen, man. Whew, look at this market. All right, let's jump around the heat map. What do we got moving this market? The S&P 500. Stocks that have been carrying this market are in the red, right? Google off by almost 1%. Amazon's pulling back from quite the week last week. Negative by 1.25%. Oracle. Microsoft off 1.2. NVIDIA off almost 2%. All right, the memory stocks that were really driving this market higher. Oh boy, okay. Let's take a look at Micron. Earnings in December at 222, you run up to 351. Whew. You got a lot of buying in Micron, man. Okay, look at this daily. January 2nd, you get strength. January 6th, you get strength. We traded up to 345 with strength in Micron. 345. Let's take a look at the weekly. Yeah, strong buying, man. Look at this acceleration. Now, you can make the claim that their earnings, you accelerate to 268, and then we trade higher. But that was a strong week last week, man. 183 million shares, one of the biggest weeks of the last year, and you push to highs. And we're pulling back on lighter volume. Let's jump to AMD. A little bit of a different looking chart. Broadcom, that's the one I wanted. Whew, different looking chart, right? Look at that. If you ask me, do you want to own Micron or Broadcom? I'd say Micron all day long. Okay? Yeah, you get some nice strength from the September earnings, but I'm not stepping in front of this train, man. Little worrisome on Broadcom there on AVGO. Been a heck of a run, but boy, that is some selling on the last earnings. Yeah, let's jump over to Intel. On the flip side, quite a run for Intel. Seems like they want to ring the $50 bell. I would agree. I mean, last week, you break above these recent highs and you do it with volume. Yeah. You know, the biggest volume numbers push you to 35. You get an acceleration October 27th. But that was the break last week. Maybe you wait for a pullback, a test for $35. Tough to chase this market at $50 when you were just trading at $20 in August. Take a look at a longer term. Look at the monthly volume, man. The tough part about this, though, is that the monthly volume stops at $40 in October. And it's the same thing. You know, we're everything's getting a little lofty here. At some level, people are going to want to sell that have been riding this up. You know, the volume's drying up a little bit past 40 on a weekly basis, though. Decent numbers, but again, that volume took you up to about 40 at the end of October, their last earnings. Since then, trailing off a bit. Last week, though, we'll see if we can get an extension. You trade higher this week on a bigger number than last week. Boy, that's strong. And on a negative day today, you got Intel up by 1.2%. Tesla down by 1.5% right now. Check in on the banks, JP Morgan. We're flat after their decline yesterday. Bank of America digesting their numbers. Down by 3.5%. Not a good kickoff to the season with the banks disappointing. Look at this. Bank of America off almost 4% right now. We jump over to Citi. Down by 1.6%. They give it up as well. Okay. Goldman reacting accordingly. Goldman was at 950 24 hours ago. You're at 928. on the JP Morgan and the Bank of America and the Citi numbers. Morgan Stanley off by 1.4% after declining yesterday as well. That's the beginning of earnings season. We got markets sliding to the red. S&P's negative by 43. NASDAQ 100 off by 264. Bitcoin in the green. We're coming back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got the NASDAQ 100. We're off by 1% right now, off 255 points. Now, that's a 30-minute bar, but check it out. It's a bigger volume day. We got about 6 minutes left to go in that 30-minute bar. You compare it to the action we've had, whether it's the last few days, it's a bigger number. You back it up more than that, it's one of the biggest openings we've had going back, and that ties you into New Year's Eve. Okay, the holidays. But, yeah, we got some selling. And in terms of technically, okay, you're right where you were last Friday in terms of the lows. And you back this up as well, you trade through here, man. 25,200 is the next stop. We're 25,600. And realistically, 24,000 is right out there from the lows of November. You had a lot of volume down there. Okay? You look at this chart. And folks, this is not doom and gloom. This is an index that's gone from 16,000 to 26,000. And all I'm telling you is that we might get a 1,500 point pullback because technically, you got a lot of volume at the November lows. That's where we had the sell-off in October. That was tariff concerns, right? That was when China was back on the play. Remember, he said, maybe I'm going to put those China tariffs back on or something like that. We reprieve. You come into November. You catch the bid. And, yeah, now we got some selling to kick it off again. NASDAQ off by 1.2%. There it is, 300 points. We're making session lows as I speak. Protect yourself out there today, folks. Okay, you get the VIX saying everything. 1764. We jump to the S&Ps right now. You're off by 45 points, 69.57. Jump to crude right now, trading up 57 pennies, and we'll finish it up with metals. Golds, giving back some of those gains, but records on gold today and records on silver. Silver up by 5.5%. We take a look at the dollar. A little bit of weakness in dollar, 98.97 in that dollar index. All right, folks, thanks so much for tuning in right here at TFNN, kicking off your trading day here with me. Stay tuned. We got live programming coming up all day. Basil Chapman's coming up next. We got our man Steve Rhodes live at 11 o'clock with the Trader's Edge. Fast Market from the Schwab Network at 12. Larry Pesavento live at 1 o'clock with Trade What You See, and I'll be back at 3 o'clock today as well. Markets in the red. Russell's in the green, actually. How about that one? Yeah, Russell, flat, the outperformer. Growth stocks leading the way down, off more than 1%. Basil's coming up next.